Hey, this is Christian from Hertz Tribeca Trade Group with your swing trade video on. We actually did two new trades today for the swing trade program. So this is going to be a 2-for-1 special in terms of videos. So today is Friday, August 18th. And let me just back up and take a look at a trend that we've seen over the last year. So this is a spreadsheet that kind of bringing you behind the scenes. I've got a couple of different spreadsheets that track ETF fund flows. This is my year-to-date spreadsheet. So what's kind of interesting about this is, so what have been the biggest asset gatherers this year? Well, GLD, and that's mostly in the beginning of the year. GLD has added almost, it's $13.6 billion in GLD. So GLD by far most inflows of any ETF out there year to date. Next, aggregate bonds, which is a little bit of everything. You got some corporate bonds, you got some treasuries in here, you got some high yield bonds, a little bit of everything. Next fund is SPX. This is VOO, which is just like SPY. Next is LQD. So all of this is the top four. Next, which is an ETF that a lot of people have never really heard of. I talked about this in the trading room today, but USMV, what is USMV? It's minimum volatility. So the name may not jump out at you in terms of what sectors it is, but it's mainly your defensive sectors. It's your utilities, it's your REITs, it's your consumer staples, it's your telecom stocks. So that's the stocks that make up that ETF. And this ETF has just been on fire the last couple of years in terms of adding a lot of money. So it's actually added close to $6.9 billion. And it's funny because not a lot of people know this ETF, but it is number 5 in terms of asset gatherers this year. And then a couple lines down, you have VNQ. VNQ is an ETF it's the Vanguard ETF that tracks REITs. So just like IYR, which more people are familiar with because it's been around longer, and sometimes the first ETF that gets into the space is the one that people know. But VNQ has actually added $4.7 billion. This is more of like a buy and hold strategy, and VNQ has a lower management fee than IYR, hence money following into that longer term trade. So these two have been really built up for the most part of the beginning of this year. What I've noticed is a little bit of money coming out of USMV, just starting to. There's about $250 million of outflows. Today, we saw another sell order in USMV. So, these things very much, which the first chart I'm going to bring up, just to kind of give you a little bit of background, is TLT or ZB, whichever one you want to look at. And it looks like these are starting to, kind of just been, over the last month, been letting this trend play out. Basically what's going to happen here. Of course, Thinkorswim is not working with me here, but there we go. So on the daily chart, you could see that. Just scale this down a little bit. It almost looks like we're starting to break down a bit. So bonds have been, just on fire the last couple of years. But it's starting to break down here. We actually closed, and the most important, the most important is the closing print, which we actually fell below here intraday, and we climbed back. So nevertheless, still down 50 basis points. But we're starting to see as the yields, when TLT or when ZB goes down, that means yields are going up, and that makes the dividend yield plays such as utilities, REITs, telecom stocks, it makes them a little bit less attractive. So we don't have to have a full complete breakdown in bonds, but nevertheless, they're not going up anymore right now. And so it's a sideways trend. I think they're going to break a little bit lower. So what does this mean? So a couple of things that I did, this was a trade that I had on last week, which I'm no longer. I was short telecom. Once telecom kind of broke the value area and continued down, I established a short telecom trade right around here. I didn't catch the break perfectly, and then I took it off here. Same thing with XLU. Utilities, I got short once we broke value. I covered that. I'm no longer short. I actually timed that one really well. So what I'm looking at now is REITs. REITs have been a little bit stronger. They've actually had more recent inflows, but it's kind of the same pattern. They're starting to break down here. They just broke the value area today. And so what I'm looking for is continued downside action here in REITs. And you can see this VPOC down here. That's going to be my target. So this was a previous point of control where a lot of buyers and sellers met up from a previous time frame, and we've never actually touched this particular area. So that's why there's a purple line here that draws automatically using our indicators. And that's the target that I'm looking for basically in IYR over the next month. So what I did was the trade that I constructed today and sent out for IYR was the Oct 80 puts. I want to give this enough time. So I didn't go front month, which today is the last day of August trade. So September is going to be front month. I gave this a little bit more time. I went out to October. So it's always a balance of how much you want to spend on a particular trade. I went to the 80s, which is down here, and spent $1.61. So this is the trade that I sent out. Now you can also kind of a more advanced trade, and I did not send this out, but I actually did this as well. I made this into what's called a limited risk reversal, meaning I bought puts and I sold call spreads to help finance the cost of the puts. So, you know, this kind of buffers me too as well. If IYR doesn't get down to my target, but it kind of stays where it is, I'm selling out of the money call spreads and taking in 68 cents. So, you know, it's kind of adding another layer of aggressiveness into the trade because, you know, the risk here is that IYR actually bounces back and gets back into value. You know, then I'll lose on the puts and I could possibly lose on the call spread as well. But I think we're going to have a little bit more downside here. I think, you know, the main thing to watch here is what bonds do. Is if bonds, if ZB or if TLT continues to go lower here, then I think this trade should work out. So that's the trade. That's number one trade. So that's my short trade. I also put on a long trade. You know, I've been watching international areas. You know, I think that international areas are performing much better right now than US. That's been the trade last month. You know, I've talked ad nauseum about emerging markets. You know, but you look at, you know, the SPY performance over the last month. There we go. Basically 1%. But you look at some other areas around the globe, EWG, Germany up 7.8%. So nobody's really talking about this all that much that I see anyway. Emerging markets up 5.6%. But the rest of the world has been recently outperforming the US market. So one area that I've had my eye on before, you know, I continue to be long EEM and emerging markets and look for opportunities there. The China ETF, this is not FXI, that's Hong Kong shares. There's two different types of shares when you're dealing with China. It's either Hong Kong listed shares or locally listed shares, Shanghai listed shares. So what I've noticed is if you go to the weekly chart, so long-term chart, and you scale out a little bit, you know, this was the big ramp up into local China shares once they made this possible to do. These things really caught fire and then came down quite, you know, just as fast. And I think everybody remembers this. This was Shanghai coming down pretty hard. But if you look at what's been going on over the last year, I guess, is basically, at least since December, once we kind of gapped down, we've been basing here for a while. So we actually just got into the yearly value area. That's the green line on the chart. You know, notice how big this value area. I like that. So I established a position, giving this a shot, going long the ASHR, and I'm going into January. I want to give this plenty of time. So I bought the January 28th for 66 cents, and I'm scaling into this position. Why am I doing that? Because sometimes we poke our head into, poke our nose, head, whatever, into the yearly value area, and we fail. So I want to make sure that this is for real. So if we continue to move up here, I'll probably add a little bit more to it, but I want to be sure. You know, EM is a good example. You know, EEM basing for a long, long time, got into value back in April, just a little bit, came back out, got back in, out, and then surefire a nice move, which is what's been going on now in emerging markets. So that's what I'm looking for ASHR. Again, this is a trade that I've been watching for the last couple of weeks, and I want to see this continue. I want to see Shanghai continue to get in here. So that's my, you know, and I will add to the trade if we get a little bit more continuation and a little bit farther away from the green line bottom of value, I will be looking to add to that position. So that's it. Those are the two new trades. This will be since we started this swing trade program, this is the fourth trade. The other two trades, IBB, we've got till September for that trade. I sold put spreads. Not much to really comment on that trade. It's kind of doing what it's doing. This week we kind of chopped around a little bit. We saw a little bit of volatility in the S&P, and biotech fell a little bit, but not too far. So that trade's fine right now, I think. SMH, we sold some call spreads. SMH actually went against us a little bit. Applied Materials had blowout earnings, so it kind of lifted the whole sector. Sometimes these things end up being one-day events, and I still think the group is pretty overbought here. So continue to like those first two trades. So that is it. That's today's video. Everybody have a great weekend, and thanks again for watching the video.